There's just one
Thank
thing I'd like to mention from the introduction, just before we go on. Everything I discussed today is based on a technology that was originally founded on hunting down tornadoes and volatility in nature, and we're applying the same kind of strategy to understand how human beings interact in large groups and create panics and manias. And today we're finding that we're in more and more of these kind of panics, whether it's in the cryptocurrency market, the gold market, or international equity markets. And what makes it really, really interesting and unique is the idea that a lot of people think it's chaos that creates chaos, but in the markets, what actually happens is that there's a lot of decision makers and individual traders, whether they're small traders or big traders, and they're moving at different rhythms on different time scales. And when they interact, all that discord and chaos actually creates order at certain points in time. And I call those opportunity windows. So I'll only be discussing events taking place in the international marketplace today that are just entering those windows, so that you'll have timely insight into what's likely going to happen in the very near future, but also the ability to plan forward, such that instead of looking at patterns of the past, we're able to calibrate human and machine perceptions forward so we could see what others can't.
Phenomenal, phenomenal. We are having a little feedback, so I apologize. I'm going to log on to another device after this question. We have a question from a fellow fan in Toronto. Laura would like to know the difference between buying Ethereum stock and how to do it safely. What is the difference between Ethereum ETF and the coin and so forth? So maybe simplifying that in layman's terms for us, Efrem, that would be great.
Absolutely. They are two completely different markets. It's kind of like the analogy of asking the question, what's the difference between buying silver bullion, like the actual physical metal, or buying a paper asset, which basically says that, like an ETF or some other asset that isn't the physical metal, that says, hey, we'll deliver this to you in the event that you want it. Now, we found out that this does not always work in futures markets. If you recall, last year, there was a huge event in the energy markets, specifically the oil market, where oil went all the way down to negative 37 on the futures market. It's something that should never happen in the real world, but it can happen when somebody, if somebody promises to deliver something, but there's nothing to deliver, or if there's too much to deliver and nobody's able to store it anywhere, they have to get rid of it. And to get rid of it, they may have to get rid of it at an incredibly low price or an incredibly high price. And these discrepancies between the actual paper market of gold or silver or the paper market like ETFs of Ethereum compared to buying the Ethereum on the blockchain, which is available on companies such as Binance and others. And I have no affiliation with Binance, just for the record, but I do trade on there. And basically, the point that I'm trying to mention is that because there are different groups of people trading an ETF than there are people trading the actual cryptocurrency, there is not going to be a direct correlation between what happens on a given day in the cryptocurrency market and the specific ETF. Sometimes the moves will be much more exaggerated in the cryptocurrency market, partly because some of the exchanges that it trades on has extremely low liquidity, whereas some of the ETFs, because now they're becoming more popular with some of the hedge fund managers that want to allocate larger position of their portfolio to that area, there's a lot of active buying. and increased liquidity taking place there. But there are events where you could also those ETFs could trade far above market value of their underlying. And when that happens, sometimes you'll have a large sell-off in the ETF that's not actually found in the cryptocurrency market. So it's very important to be aware of those relative differences. Really interested in trading, a cryptocurrency, it's always better to trade it in the cryptocurrency market than it is to trade it in the ETF market.
Interesting, interesting. And I hope that the technical difficulties are over. I do have the patience of a saint when needed. So here we go, Efrem. Thank you for sharing that. Okay, excellent, excellent. It's all good. I do yoga, I work out, I meditate. God has our back. Okay, so moving forward, and thank you for answering that, Efrem. Let's talk about must-own stocks. Let's touch upon silver and gold, and what's your expert opinion on which stocks to focus on? Is it the hard assets, actual gold and bullion, or gold, bullion, and silver and platinum? You know, if you can clarify in your expert opinion, where should we focus and invest our monies?
Well, one area to look at, and this is like a lot of professional investors look at the ratio of one asset to another asset to just see how the valuation is and which one has more potential to actually perform. And when you look at the ratio of silver to gold, well, it's not at the absolute lowest level in history, because we were just there just a number of months ago when silver was, down in the teens. But it is at among the lowest points in history. And normally, silver, trades at about 15 times less than the price of gold. So basically, we have a long way to go, given that silver right now is trading on the at around 20, just above 26, 25, and and gold is trying to pierce that 1900 barrier and try to attack those all-time highs. Now, there's other reasons why I would choose silver over gold, and these are like them in no specific order. One of them is that a lot of the technologies today that are in the industrial space are actually using lots of silver. So 5G technology companies, that equipment is going to require plenty of silver. Basically, in the electrification space and electric vehicles, and batteries, it's going to require silver. So in the development of that industry, and as well, silver is also an asset that has really underperformed considerably for many, many years. A large part of that is because a lot of the institutional banks found it a very lucrative algorithm for shorting extreme amounts of silver. And because of the depressed prices in the silver market, it caused a lot of the mines to shut down. So there's not much supply available. And in order for those mines to become more attractive, over the period of years, they transitioned into mining gold. So there's been more gold mined in recent time than there has been silver relative to history. And because of supply and demand economics, if you have more demand and less supply, that's the ultimate scenario for a market going higher. So that's one huge reason. Another big reason is that the technology that I use in order to identify these windows of opportunity is telling me that the magnitude and the reward to risk ratio for silver relative to gold. And the way I do the analysis, I do it independently. And every trader should actually do it this way, even if they're not using my specific protocol for identifying these windows. Some traders that are experienced or traders that are learning how to successfully trade, they may have a strategy that they feel that works. And if it does, here's how they should use it to the maximum advantage. So they should use whatever is working for them. And then they should say to themselves, okay, let's independently analyze each of the areas such as silver, gold, platinum, and see which one looks the most interesting. But that's not really enough. You need to understand the correlations and the relationship between each of those classes. So what I would do is I would put up a chart of silver relative to gold. So what you would do is, if you were charting it, you would just put the price of silver and you would divide it by the price of gold, and then you would chart it. And if the analysis of that trend for silver divided by gold is moving up and to the right with a good reward to risk ratio and proper positioning, then you would want to actually invest in silver, because it means that silver is going to be outperforming gold regardless of whether gold goes up or down. So that's one thing I like looking at. I also like looking at the factors that move the price of gold and silver. So one of the big factors that move gold and silver is the US dollar. But there is a better metric to look at. A lot of traders will look at that, but that's not the best one. The best one to look at in a world where we're in chaos, it's not just traders in a given country that are interested in buying gold these days. It's all the central banks and individuals and hedge fund managers that need to allocate to protect their portfolios, and in some cases that are in the stratosphere due to a bull market that has progressed for well over a decade since the previous crash. The point is, you're going to want to look at this thing called the World Currency Unit. And it is available on most charting software if you look for it, but it may require some sophisticated software, like whether it's TradeStation or TradingView. Those are good platforms for traders that are looking to chart these kind of ratios. And what's really interesting about looking at the World Currency Unit as opposed to the US dollar when evaluating whether you should invest in gold or silver is that the World Currency Unit is a basket. It's basically telling you, it's adjusting for inflation, going back in time up to today's date. So it's telling you how much could you actually buy with a basket of all the world currencies. And sometimes I break it down into two parts. Sometimes I break it down into only looking at the basket of emerging market currencies as well as developed currencies. And if all the ratios of, let's say, if I take silver and I divide it by the World Currency Unit, which usually has a symbol of WCU on charting platforms, if that ratio, when plotted as a chart, is pointing upward and to the right, then that's indicating that silver will be rallying regardless of the direction of deflation or inflation. And that's very valuable, because historically gold and silver have moved tremendously during periods of deflation and inflation. Usually first they start their move and their ascent in deflation, and then when inflation kicks in, it really starts going parabolic. So I believe right now we're still in the deflationary phase, because there's all this printing. We still have a fairly strong dollar relative to the rest of the world, but in coming time, we're going to have to repay these debts. There's going to be a reckoning, and you're going to see inflationary forces take over in the next few years. And when that actually kicks in, you're going to see an incredible rally in the price of silver and gold. But I would not be waiting. We are entering a critical window immediately. So.
Fantastic. So Efrem, check this out. I love that you explained all that, but I know that many of our viewers and fans, they like to delegate. I like to delegate. I understood what you said, but it just doesn't, I'm not feeling it. I rather delegate to an expert like yourself and have you analyze and provide valuable, actionable insights and place me on the right side of history. And I know the investment to work with you is only $3,500 US. And then there's the monthly fee for your subscription, which anyone that's watching today, $3,500 US for Efrem to analyze your portfolio, and then $379 a month US as well. You're saving because it's typically $530 a month. We're not here to sell you, but after hearing what he just said, I loved it. And when he was talking about the basket of goodies, I was thinking of a basket of food because I'm hungry, or a basket of fruit. My point is that it just like I'd rather just delegate. I lost you, you know. So let's simplify it, Efrem, and let's talk about a question that I have from Paul, and then we'll go back at the end and talk about how you can get in touch with Efrem. And now that you've watched the Hardcore Hustle Show, or you're watching, you're able to get this sweet deal and work with him directly. Now, we have a question from Paul. It's quite the question. Let's see what you think of this, Efrem. Now you're the mastermind behind RunningAlpha. It's your baby, which means you have immense knowledge of the biases that affect the decision-making of both human beings and the machines that human beings create. What is your favorite bias that influences outcomes in the market? Maybe not the strongest bias. I won't ask you to give away your trade secrets. Perhaps there's a bias that you find interesting, Efrem.
There actually is. And the thing is, the biases that most people are aware of are behavioral biases. And I find that's good for looking back in the past. And in hindsight, it's not going to make you any money. So I kind of reworked history and said, okay, how do people make decisions? And what bias would you need to know in order to peek into the future? So when I was thinking about that, I was thinking that, okay, in order for somebody to make a decision, they must be looking at information. So if they're a fundamental investor that's looking at the balance sheet of a company, they're looking at a chart of how that balance sheet is changing over time. They're hopefully it's moving upward and to the right in many different areas. So, you know, whether it's growth, revenue growth, whether it's profit increases or margin expansion, or you know, having a wider moat at an increasing rate over history, then those would be positive things to look at. But they would look at it and they would chart them. Okay. Then if you're a technical analyst looking at price, volume, volatility, and these kind of ratio kind of charts we talked about earlier, then you would be hoping to have a chart that's upward and to the right, but based on those variables. Now, the thing is, when somebody is observing a chart of something, whether it's fundamental or technical, immediately a bias emerges, because there's only so many technologies and ways that math could be used. So whether accounting dynamics, or whether you're applying some kind of extrapolation or some kind of calibration, whatever you're using, you're limited to actually try to base your decisions on what's happened in the past and assume that the future is going to follow forward. So I would say one of the big biases that where people make a big error is recency bias. They look at the most recent, you know, information, whether it's over like the past 30 days or the past year, and they see a trend that's happened, whether it's a trend individually within a specific asset class, or whether it's a trend of one asset class relative to another. As soon as they see it working for an extended period of time, each time it starts producing a better return and a better track record for that individual trader, what tends to happen is they get more trust in their decision making, and then they make bolder decisions. But the problem is that the way the markets work is the same way nature works, and that is that by the time it actually produces a signature or a behavior on the price axis or on the balance sheet that is upward and to the right, and you build that confidence over time, it basically changes its character, and whatever you were using stops working. And that really starts frustrating traders. And then they start abandoning their strategies or tweaking their strategies, when in reality, their strategies were always working. They really just need to know what windows to apply their strategies in. So it's all about identifying states of human behavior just before a bias is going to start impacting them. So what I did was I said, well, if everyone's observing information, and not everyone's observing information on the timeline. Some people are looking at information on, like as a day trader, over a period of like 2 days, and they're looking at trends that happen in there, and they're trading just very short term. And others are multi-generational traders, you know, whether in the gold market or international equity market, that want to protect their assets over a period, you know, for generational wealth. And in those cases, when those traders interact at different scales, they produce a thing that's very different than a behavioral bias. And I call it a perception bias. And that bias is based on how they perceive a trend changing based on the limitations of the mathematics that they apply, or the accounting dynamics they apply to the situation. And because those accounting dynamics are finite in scale, I've modeled all the variations that people could apply and identified a simulation such that when they interact, how could you identify when they all interact, you'll have a maximum bias such that just when a trend is about to change, they will be on the wrong side of history. So what I try to do is take the opposite side of the trade. And I call that real contrarian investing. A lot of traders and investors will say they're contrarians, but they're really not. What they think a contrarian investor is that they will do the opposite of what the market's doing. So if the trend is very, very strong, they'll try to short it. Or if the market is selling off, they'll try to go long. But that could get you really injured. And I could give you and that makes a really good segue into, I'm sure, the next question, which has to do with what happened in GameStop today. Because the point is, if you are on the wrong side of history based on the way your perception bias is, then what's going to happen is when the behavior of the market changes, you're going to become more frustrated. You're going to have more anxiety, and you're going to make worse decisions. And when you make worse decisions, even applying a strategy that's good, it's going to turn a good strategy into a bad strategy. And then when it's really time to use the strategy, you're not going to trust it anymore. And I think that's the biggest risk to starting, like, day traders or investors that try to learn the market cycle at the end of a bull market. Because at the end of a bull market, it's so easy to make money. You don't need to be smart, but the problem is it ends abruptly. And that's when it really shows. And that's really where I try to help investors identify these massive, like, tectonic shifts in perception biases that drive behavioral biases, which ultimately drive investment volume, which dictates liquidity and ultimately changes how people put trades in the order book. And then if you know how interacting order books work, it's pretty simple math, and then you could actually identify where the prices are going to be. So all of that is kind of incorporated into this kind of strategy that I apply.
That's quite the strategy, Efrem. Once again, that's exactly why I would just invest and have you analyze my portfolio. Let's talk about it. Let's try to keep it into, a little bit of a shorter answer, because we've got a lot to cover. Love the information, Efrem. Can you please share with us a little bit about electric vehicles? Where is AI going, and what should we focus on in terms of investing? And where's, where are the gems? Where's the lowest bearing fruit?
Well, I mean, electrification is definitely going to be in play for years to come. And the vehicles that have been used for investors getting into the electrification industry is very different than the vehicles that were used in technology in the 2000s. It feels very much the same, but that's actually good news, because there's only going to be so many winners at the end. And yes, it's true that there was a big, setback after the mania of 1998 to 99, and then we had the crash in 2000. But if you really look at the big picture as an investor over a 5 or 10-year period, the market went substantially higher than those highs, and people made spectacular fortunes in stocks like Tesla, Microsoft, and Google and Amazon. So the point is, it's first important to understand where the capital spending cycle is going to be. And it certainly is going to be in electrification. So we check mark capital spending cycle. That's good for a long-term investor. But it's also important to realize that there is a craze right now where, yes, a number of months ago, it was a great valuation to invest in some of these vehicles. Now there's fewer and fewer players that are trading at valuation multiples that make any sense. So I'm sure they'll either grow into those in the coming, whether they grow into them in the coming months or whether prices set back, which I believe they will at some point going into mid-year. We'll have an opportunity for a very substantial rally at better valuations sometime, in the third and fourth quarter. So, but it's important that if special situations emerge, these are things that I always bring up to, my members that follow me, so that, you don't want to generalize too much and say, well, the whole space is likely going to roar in the third and fourth quarter. But yet, if there's 2 or 3 really interesting opportunities that come into play much earlier, then these are actionable opportunities we express to our members. But the main thing I want to say is that going back to the vehicles that were used for tech and the vehicles that are used for electrification, they're quite different. In technology, we used, it was the IPO, the initial public offering, that was basically used, and a lot of stocks would just gap up to insane valuations in the late 90s, and people would ride the train until it crashed. And you'll always have some people making money, but the majority have to lose money. And part of the reason is that when a lot of people get in, the ones that already made a lot of money cover a good part of their positions. And if you get a lot of people covering their positions around the same time, and there's only so much liquidity in the market at a given price, in order to attract the attention of somebody else, you have to drive down the price. And then the cycle begins again. So not to take negative, sharp movements in price in capital spending cycles that are going upward and to the right as a negative. As long as the capital spending cycle's there and there's a reason for the technology and the fundamentals are there, then sharp sell-offs over a 1 to 3 month period is very, very healthy, and not to be scared out, not to listen to the media that will just say, oh, is this the beginning of the end? Yeah, one day it is going to be, it's just not going to be this year. There's going to be some scary times if you're in the wrong sectors or the wrong areas this year. But if you have insight into where those opportunity windows are, there's always a bull market somewhere. And that's really where my focus is. So the vehicle that's used in electrification, it's not IPOs. There are a few, but it's this thing called a SPAC. I don't want to get too technical, but you're going to hear it on the news an awful lot. And really what it represents is it's a special purpose acquisition.
How do you spell SPAC? Okay, go ahead. No, if we can simplify it.
I'll really simplify it. Yeah. So it's SPAC is the acronym, and it basically stands for Special Purpose Acquisition Vehicle. And they came into existence because these technologies, because everything today is happening so much faster. They don't have the timeline to wait for an IPO and years, for regulation to pass it through. So what they do is they try to find a company that already exists in the marketplace, that already had an IPO in the past, so you bypass, and short circuit all that securities regulation and paperwork. And what you do is you find investors that are going to capitalize that specific vehicle, and then those companies then those SPACs that have the money try to identify up and coming startups and opportunities that are ripe to go to market And once they identify them, they acquire them, and then they spin them off and then you could buy those things either as a SPAC, and when they're spun off, you could buy them with their specific ticker. So some of them may own 3 or 4, companies that are very hot in the space, and others may own 1. And then when they spin it off, you could just, buy that specific company. And that's a way you could get involved it's kind of like getting involved in a pre-IPO. You buy the SPAC before the company comes to market. And then when the company comes to market, you've already, attained a very handsome return if you've done your homework.
Wow, amazing, amazing. Efrem, tell us a little bit about the biotech crisis. We've got Pfizer, we've got Moderna, and a lot of investors say that biotech is the way to go. In your opinion, though, what do you suggest?
Well, like the biotech space has been one of the best parts of the market from last year, and it's going to be again this year, multiple times this year. And I'm seeing tremendous innovations in the genomics and protein platform space. And what that basically means, and why does it matter to the world today, especially? Well, we're in the middle of one of the worst crises in history with this COVID-19. And the companies that have been addressing it, as many have heard in the news, you keep on hearing about Pfizer, and you keep on hearing about Moderna. You hear about AstraZeneca, Oxford University one, and then you also hear drumbeats about a few that are coming online from Johnson & Johnson. And then Merck is going to have something that's like a quasi-vaccine, but they've abandoned some of their stuff. And then also Novavax is another company that is working on a very viable vaccine, but it hasn't yet, got passed yet. They're still in phase 3 trials, but it looks quite promising. Between Moderna and Pfizer, the thing is, they've already run. Moderna's already run a great deal. It's likely to run more, but I'm certainly not going to go tell people, oh, just go buy it at this price. If you wanted to, a very small amount. And then if we got some fresh opportunity window on a shorter time scale, then you could add to it. But just in terms of the vaccine itself, I just got to qualify this. I'm not a medical doctor, but I am connected to a vast network of leaders in the field where I interact and read a tremendous amount of accredited research that's not garbage online, but actually in journals that are vetted. So I have a pretty solid understanding of how that would impact the forward stock prices. And it looks like Moderna, I kind of like the data on Moderna more than Pfizer, but that is not to say that people should not be using one over the other, because we're going to need protection. And there's going to be multiple solutions along the way. So it's not like, let's just pick one. You could have one vaccination now, and then as another technology comes out a year from now, you could use a different technology. So it at least gives it an opportunity to slow down the spread, which would be a good thing. But the reason why I like Moderna more is that based on the data that I've looked at that they put out, is that right now one of the big problems is that they promised that most people would get 2 shots, but some people are only getting 1 because of supply chain bottlenecks and disorganization in the government in terms of figuring out how to get these into people's arms. And the thing is, if you look at the data with Moderna, the efficacy based on the endpoints is much better if you only have a single dose. So let's say they don't get you the second dose on time, you're better off going with Moderna, but you don't really have a choice. Because some people, sometimes it just goes to a certain geography. So you'll have to take what you get. But if you're just asking me in a perfect world, the efficacy is higher by like leaps and bounds higher in Moderna. I believe it was well over 80%, if I'm not mistaken. But if somebody's there to correct me, that's fine. But I know it's definitely higher than Pfizer on a single shot. On a dual shot, they're comparable. I have heard, from clinical studies that there are more people that are finding that they're having like more aggressive, 3-day battles, like once they get the second shot in Pfizer. So that's a little bit, but it doesn't, that doesn't change the fact whether it works. And the other part is that because we have so many variants that are conflicting the world, that are affecting the world right now, like basically we have this variant in the UK, we have a variant in South Africa, we have a variant in Brazil, a variant in Nigeria, and then most recently they're talking about this variant in Los Angeles. And based on the virologists and the research that I've looked at as recently as today and yesterday at a very deep level, I think there's a lot of, the media likes getting people watching them. And the way this works is that any virus mutates. And now the thing is, not all mutations matter, because a lot of the times they'll mutate in an area that's not going to really change, the outcome. Either make it, not necessarily make it more severe or make it more fit, for replication, or make it more transmissible. So but what got people's attention with the South African one and the Nigeria one and the UK one is that there was more than just 2 or 3 shifts in the virus. There were literally, in some cases, over 20 simultaneous mutations. And that's pretty substantial, especially it's happened on the part of the virus that's directly attaching to the ACE2 the ACE2 in the human body, that allows you to latch on and start modulating and changing the behavior of our cells. So I bring that up because vaccines are not the end. And yes, it's going to be important to have companies like the ones I've mentioned, but there are second generation companies that are far more advanced, than they're working on it right now. And they're working on it for the most needed people. So that's something I'd like to touch on, unless you have some further questions regarding this first question.
Of course, yes, I have further questions, but you know what, Efrem? Let's keep going with this flow. This is awesome. And I like they said, not all mutations matter. Let's keep going on that.
Okay.
Please.
So, yeah. So basically, there's, in the UK one, from my understanding, there's this thing called the open reader frame. And I don't want to get into it gets complicated, but what happens is that it actually got pushed in a direction where a lot of the code of the virus is no longer being read. And it's quite possible that ultimately a lot of coronaviruses, or viruses that inflicted people in the past, it did give indications that they may be weakening over time once that open reader frame starts shifting in that direction, and it started shifting there. But we're not clear, because when that happens, it also causes a problem. It means that the part of the virus that's no longer being read, it basically means that all that part of the virus is open for mutations. So it could be that a lot of the mutations that are happening today that are causing a problem could be because of that shift in the open reader frame. So I would advise people that, are in the know, or really want to know a lot more, to really look up, the open reader frame. It's called the ORF8, and just type it into Google and type in like ORF8 into, mutations or whatever, and then you'll get more insight. But if there are people that want more specific insight on some of that research, certainly just provide your email, and I could basically send you some links to pertinent information, as well as some world leading virologists that are studying
Yes.
that. But the main thing at the end of the day is that all of these methods in the first generation of vaccines, whether it's Moderna, whether it's Johnson & Johnson, whether it's Pfizer or AstraZeneca, all of them are only looking at pretty much, well, not all of them, but a lot of them are either looking at a large part of the virus, but a lot of them are just focusing on the spike protein, because it's the spike protein where it attaches and latches onto our body. But there are other proteins that are involved in a virus that actually are equally, if not more important, to be aware of when actually building a vaccine. Part of the reason is because vaccines usually take a long time to verify and study before they come to market. I mean, in this case, it was fast-tracked. But the reason why they take a long time is because you also have to do studies in terms of whether there's going to be antibody dependence or resistance. So that basically means that if you get the vaccine, and then let's say over time, as your antibodies weaken, and there's 3 types of antibodies, well, at least 3, but you've got basically you have your phage cells that as it tries to enter your body, it could just ward off before it actually gets into your system. If it gets into your system, then basically you will produce antibodies, hopefully. But those antibodies die off, and they're supposed to die off, because you don't want to have antibodies for too long, or you could get a lot of problems in your system. So it dies off, and then the B cells, basically, they're called memory cells. They just remember the code, so that in the event that in the future you have it, it will start producing the antibodies to fight the antigen, now, which is the virus. Now, the thing is, B memory cells have a limited shelf life in terms of their memory, so it's best to have T cell immunity. And there's different types of like T cell immunity. You got like, I don't want to get into it, but you may, like, if you do read on the internet, and you'll see stuff like CD8 and CD4 or whatever, that's relating to T cells. So without bogging you into like technicals, the idea is it's best to have T cell immunity, because that gives you the longest term recall of the antibodies that need to be produced when a host cell sees a virus in the future. And these first line of vaccines, while when they did the tests, they weren't testing for necessarily the endpoint. Like, their endpoint was not testing for T cell immunity. It was testing for better outcomes, so that whether that people were going to die from the thing, or whether they were going to actually have less severe disease over a certain period of time, and that varies in different studies. But those are the main things that they were looking at. And yes, while theoretically the companies suspect that there will be some B cell and T cell immunity, the degree to which it will be effective is unknown, partly because they did not apply second generation techniques that are being applied by certain companies. There is one company that's really, really interesting to me right now that's doing second generation research. And it's something that I'd be looking at buying over multiple levels, like, buying some here and then buying some. Like, I actually bought some when it was significantly lower, and then it rallied a little higher, and now it's dropped a bit. And I'm looking to buy some more if it pulls back to a certain price and time window, and then I would issue an opportunity window to my members. But The company is Sorrento Pharmaceuticals, and the symbol is SRNE. And there are other companies that are working on stuff like that, like Heat Biologics is working on that. The symbol is HEAT. But Sorrento, I really like what they're doing. It's so innovative. They are able, using their platform, because they're not just looking at a single protein, like the spike protein, but they're also looking at the most valuable protein, which is also the N protein. The N protein is really related to the nuclei of the cell. And that is so important because when this virus attacks the cell, even though some of the vaccines work to actually prevent the replication, they act as, like, some of the stuff will act as, there are antivirals out there that will try to mitigate the replication, but once it's already gotten inside your cell, it's actually hijacked your cellular machinery, and it's changing the genetic expression of the cell. So the antivirals can't fix that. They could just fix new replications, but the ones that were already affected, there are, specific class of drugs or therapeutics called basically immunomodulators. And what they do is they modulate the genetic expression of the cell and actually stop the hijacking of the machinery. And that's part of the reason that I understand why people have long hauler syndrome. People who get it, even if they didn't have a severe case, they tend to feel it over a long period of time. So it's something to discuss with your physician about there's immunomodulators that are available, that are non, dangerous in order to mitigate that situation. But SRNE and Sorrento Pharmaceuticals, because it's attacking multiple proteins at the same time, it's actually also able to account for situations where there's going to be mutations in the future. So if there are immense mutations in the N protein and other proteins that aren't being accounted by this, it could actually give insight into whether there's going to be antibody resistance. And they could actually create they actually have a platform where they could actually create a vaccine that will actually almost assure that with high probability there won't be antibody dependence. So as opposed to just hope and wait and have clinical trials and then be a guinea pig and figure out whether over a period of time there is a problem, these next generation drugs will actually know beforehand with high probability that there won't be a problem in that space, as well as it would be able to address mutations, because right now the way they're addressing it, and it's quite impressive because vaccines, which are the best ones right now, Moderna and Pfizer, they and BioNTech, which work with Pfizer, they basically what they need to do is every time there's a mutation that's substantial, like right now, they're reworking their platform right now in order to make sure that the next series of vaccines account for these changes. But the problem is, because there are indications right now that these mutations or these new variants of the virus are spreading more rapidly. Now, it's still not clear whether it's absolutely spreading more rapidly or whether it's spreading at the same speed, but it's more efficient. A lot of the virologists think that the new strains are more efficient at getting into the host cell, which makes it look, so in that sense, even though it may not be transferring to people more rapidly, it would affect more people from a clinical basis, because the people that would normally be asymptomatic with the old variant, because this one is more fit and able to latch on and get into the cell and hijack it, it creates a symptomatic situation instead of an asymptomatic situation, and in that sense wreaks more havoc. And that could be why they're thinking it spreads more rapidly. But I think that's just semantics. I think what matters is it's more fit, which makes it more viable to multiply, because if people are going to be able to replicate more virus and get into more people's bodies, then the probability that it's going to land in a body that has a compromised immune system that will actually produce even more virus and more mutations will actually result in a situation where these companies will have to continuously refit their platform for the new mutation. So it's kind of like a race against time. The nice thing about Sorrento Pharmaceuticals and some of these other companies is that because they're looking at multiple proteins at once, the actual once that vaccine is in the human body, it actually could detect changes and actually changes the antibodies to address the changing mutation. So it's almost like an instantaneous platform that's always adapting to these mutations, which is very different. Now, whether they're going to, successfully pass through phase 3 is another question. But they are a very interesting company at the least, and I do believe that whether it's Sorrento or whether it's Heat Biologics or at least a dozen other names that I've identified and will be, making aware to my members as they hit those windows this year. I'll give you an example. There was one last year that I was looking at, which was basically VoxArt, which is interesting. That's another company, VXRT, that's involved in, it's actually involved in first generation, but a very unique platform that allows it to be taken as a pill. So it gets rid of the supply chain bottleneck. So that if it passes phase 3, they could just ship it out to a place instead of having to subject people to go into a line and maybe even get coronavirus while waiting, to just do it in their own home. And then there's also some interesting things right now out of Israel, where they created this test that's like a breathalyzer, where you just blow into it and in virtually seconds, whether you have it with the same efficacy as this nasal, kind of test. And that would change the game, because people could actually get out into society again and know what's going on a constant basis.
Wow. Efrem, if I may interrupt you, because we only have a few minutes left and I still have tons of questions, so we might have to bring you back for a second show.
We could go on a little longer. Is that possible?
I think so. I think Matt, our AV guy, if you're okay with that, Matt, we're going to go on a little bit longer. If that's okay with you, 10, 15 more minutes. So we'll end at 8:45-ish, if that's cool, Matt. I think that's cool. All right. So, Efrem, where do you think, there's a few more questions. If you can condense it, so maybe, I know it's hard because you're a pretty smart dude, but if you can condense the answer into a few minutes, that would be awesome. Where do you believe or feel that the virus was derived from? Where did it come from?
I think it's a political question. I'd rather not go there. I'd rather just focus the attention on the investing space.
Okay, you and I will speak off camera. Now, let's switch gears, and you're safe here, not to worry, Efrem. Let's switch gears and go back to Bitcoin and Ethereum. We have another question here. Outside of Bitcoin and Ethereum, are there any digital currencies that you're rooting for?
Yes, but I just like to just answer one question. I did look at the ratio chart of Ethereum to Bitcoin. So regardless of where Bitcoin goes, whether it goes up or down, Ethereum is going to outperform. And for good reasons, because Ethereum has real value, because there's so many platforms that, there's like, the world right now is centralized. We're depending and we're trusting certain groups of people to do what they're supposed to do. I'll give you an example. For example, some of the social media sites, I'm not mentioning their names, basically if they don't like what somebody says. And sometimes it's legit, right? I mean, they're putting out information that is absolutely not correct. But that's a different question. I mean, sometimes it's better to know what people are thinking than to censure them. So that's a hot topic. But I believe the Ethereum platform addresses that, because there are a number of applications that are going to be built on the Ethereum platform that are going to be decentralized and allow for platforms that are similar to the types that we use today that are controlled by these big corporations. Now they'll be controlled and governed by the people. And that, I think, is the biggest reason why there's a movement towards the blockchain and the movement towards Ethereum. And I think that's where the real value is. I mean, look, if you're trying to protect against a market, meltdown, in the sense that money isn't worth anything because the governments are squandering it and using it improperly, then just buy silver and gold. But if you really want to, make a killing, or at least be on the right side of fundamentals and technicals, then invest in Ethereum instead of Bitcoin, because that's where all the value is going to come to humans in terms of solving their problems with governance, solving their problems with privacy, solving their problems with transparency, and solving their problems with devaluation of currencies.
And so,
to answer your question, outside of Ethereum, some of the smartest players, there are some smart players. There's this thing called VeChain. There's this VET is a symbol. That trades relative to Ethereum, and it trades relative to BTC. I bought it way farther back. It had this spectacular run. But you know what? If you're using a trading strategy that you think works, and it should, if it works, it's going to work on Ethereum, most likely, because that's one that's it's a pretty good traded one. So then I would apply your strategies to that one over Bitcoin. I would also look at ones like Algorand, which is ALGO. It's a relatively new one, but they are going to change the game of how people get ripped off. And I don't mean change the game of find a new way to rip people off. I mean, find a way to make sure that when people are trying to transact in the world financial marketplace, be it Bitcoin, stocks, or anything that has any value, they actually, on their board, they have some of the smartest people on the planet. That even one of them is a Nobel Prize, connected to the Nobel Prize in economics, and basically they'll just get to have a way where there'll be less manipulation, better price discovery, and and a more decentralized way of assuring that that there's not going to be bad actors in the system interfering with the trades and the transactions you're trying to do. And the other one would be ADA, and it's ADAA. And that's also a very, very smart group of people that have been working for an extended period on trying to find a more efficient platform for decentralized finance. So those are interesting ones. I have mentioned ones in the past like AUX. AUX is the symbol is ZRX. All of these, I'm not telling you to go buy today. I'm telling you to use your strategies. If you're, if you're not ready to become a member, I would say use your strategies and apply it to those. Those are some starting ones. There are others, but I can't list them all, as some of them are reserved for members. But I do follow literally every one. So if I see something, I look at ratio charts and comparative analysis of all of the different protocols that are on the Ethereum platform and on the Bitcoin platform and other platforms that have liquidity, and I compare which ones are going to do the best, and then I make it aware. And there's thousands of them, but there's really only maybe 2 or 3 dozen that are worthy of attention over a 2-year period. So
Okay.
yeah, I would also suggest that if somebody's absolutely adamant about being in Bitcoin, just buy Ethereum. just forget it. I mean, at the end of the day, if the government decides to somehow scare enough people that they're going to shut it down, because it's almost impossible to shut down a decentralized kind of system like this, no matter what the government thinks, it's just not possible, because they'll find a way to actually completely detach it, from any action. And, so in that sense,
that's good news.
Yeah.
Very good news.
Yeah. So if the government did, but if in the interim, the government scared enough people that they pulled out all at the same time, is it possible to have a spectacular crash? After having, yes, it is. Historically, after having a Bitcoin halving, usually you have a spectacular rally for 12 months following. So if something was to be spectacular and crash, then it probably would be reserved for some time later, way late in the year or next year. But, I'm always looking in real time at things. And if something comes up in mid-year and it says, hey, there's going to be a real washout, then yeah, but I don't think it's the end game, because when I look at Ethereum by itself, and I look at Ethereum relative to Bitcoin, it would just be a sell-off that's just going to be another buying opportunity, and I would make that available to members, or even the next time I'm on here, I would indicate if we're nearing a window, and if members wanted more specifics and wanted the entire portfolio, they could get it. So.
Yes, I apologize, Efrem. I wanted to ask you, if I was watching the show, I thought, okay, if I don't have, let's say I don't have 3,500 US to invest in having you analyze my portfolio, and I wish to become a member, which, by the way, you can email me, Felicia@FeliciaPizzonia.com, and anyone that's watching the show is able to save a few dollars, significant amount. You can become a member for $379 US a month, and you'll get all kinds of information from Efrem, a prediction window. And the subscription is where, Efrem? What domain or URL would that be? Website?
I would make it available. So we'll put it basically on your site, and then anyone after the show could just see the information. But it basically operates on a real-time messaging platform. And it's very, very simple, and it works on so if you have multiple, devices, whether it's a desktop or multiple cell phones, it's going to work fine, and you'll get the messages with a Bing, or you can shut it off. And if you don't want to hear it when you're sleeping, that's fine. But, when it comes to cryptocurrencies, sometimes I'll be trading them at 3 or 4 in the morning, and I will send it out. And if you, just mention, I would suggest. Yeah, a lot of the big moves happen overnight. So, yeah, it's important. It's very important it's actually really important to know when these windows are happening, because, to be up all the time is not good for trading, because you'll just be a wreck. But if you're aware that, oh, you know what, for 2 or 3 weeks, it looks dead in the overnight period, but really, it looks like there's an interesting window developing on a specific day, then I don't mind. Then I have advance notice, and then I could just sleep a little more the day before, and then, stay up a little longer that day. So that's what I like about the timing of these windows. It actually allows for management of human resources as well as trades.
Excellent. And actually, that's a perfect segue. I'm a partner in the Ultimate Publishing House. So I just wanted to mention that this show is brought to you by the Ultimate Publishing House. And we are working on Efrem Hoffman's book. He's very busy right now, but the title of the book is Prediction Window. It'll be coming out at some, possibly the end of the year, beginning of 2022. And we also wanted to thank Vita Gut. By profession, I am a nutritionist, so this came out early September. It's a way to boost your immune system and balance your microbiome because immunity does begin in your gut, and this is the perfect pre and probiotic in one. Check out vita-gut.com to invest $45 in your health and in your immunity. So that was just a word from our sponsor. As we sum up the show, Efrem, I thank you very much for being here, but I wanted to know, if I was your best friend, what move should I make tomorrow in terms of a symbol, maybe 2 or 3 symbols that I should invest in and focus on as of tomorrow?
Well, I would be investing in the silver complex. So basically, I'm talking about silver bullion. I'd buy silver bullion. If you had to go into an ETF and hold it long term, I'd PSLV. And what I like about that one is it's unlike the SLV, which is the ETF for silver. The PSLV is actually physical silver. So every so often you could actually, it's not the same as having a physical silver, in the sense that with physical silver, you could call your broker and automatically at any time of the day sell it. Whereas with the ETF, a lot of ETFs that allow you to take possession of physical silver, you have to put your request in, and you could possess the silver at the end of the month. So it's kind of monthly kind of requests. But I don't think that's the main reason why people would use ETFs. They're a very convenient way to track the price of silver. And what I like about PSLV over SLV is that it tracks much better than the SLV. A lot of the times with the SLV, you will have, when people start getting interested in silver, the price will start going above the net asset value of the underlying fund. So you're actually getting less silver for what you're paying for. With the PSLV, it's more in line with the actual bullion metal. So that's one thing I would definitely do to hedge against these issues going forward. And one thing I do want to mention is that there is a very interesting window that's developing in the silver market as we progress into, especially in the first week of February. It's going to kick off for bullion. Mm-hmm. And it will start affecting other asset classes in the silver space. And it looks like there's going to be a few waves here. And it's really important to know those windows, because silver is, and gold, but I'm interested in silver, but both of those assets, especially silver, is spectacularly volatile. And you could make an enormous gain in a short period of time. Like let's say just between, February and even in a month, you can make a tremendous gain. That's not the reason to invest. But the point is, if you do, it's always smart to take some profit so that you could actually buy in again on the next phases. And those would be made available to members. But I could tell you some of those phases are going to be in the more towards the third and fourth quarter. Well, actually, that's not totally true. Let me just backtrack. I would say possibly in the second to third quarter. I will be watching that in the summertime. But there could be some significant selling pressure after this wave. So not to get too excited, just trade it and take some profit so that when there is a pullback, or if you are a member, then I would just tell you exactly when I'm taking profit. But I see this silver market really doing, as you get into the third, especially the fourth quarter of the year into next year, it could just go off the rails. And I'm looking for moves that, could double and triple from here in the underlying, which basically means that stocks that are highly levered to the price of the metal. And when I say highly levered, I'm referring to the fact that there's a certain cost of production for taking silver out of the ground. And every dollar above that cost is actually exponentially multiplying their their earnings per share. So they could end up far out performing what the people are expecting, which causes the prices to go higher. So so I believe that silver stocks are undervalued relative to silver, which makes them extremely attractive sometime in February. So focus in that period on using your technical analysis, your fundamental analysis, and a name that I like. And I'm not saying it's the only name, because it's very important to have 3 or 4 names to diversify if one is down at any given point. But one of the biggest names in silver and the longest runners in history, like for silver, is Hecla Mining, symbol is HL. There are others that are smaller that have dramatically more upside. They also have potentially more volatility, but if you're aware of the windows, then you would know what it is. And the most important thing as a trader, it doesn't matter how much volatility you have. That's not the risk. The real risk is you making the mistake of getting out at the wrong time or second guessing yourself. But if you're aware that these are the likely areas of what the tail risk could be given the global economy, then when it happens, instead of being nervous, you're actually welcoming it, because you're already planning to have money available to allocate it at those levels. And if it doesn't come down to those levels, then you're happy with what you put in and you're making money. So this way, you're happy if the market goes up and you're happy if it goes down. And that's the best way to hedge, as opposed to buying a stock that's going up and buying a stock that's going to go down and making no money. Because what happens a lot of times is hedge funds will hedge, and that's why a lot of hedge funds make no money. I mean, there are a few that do, but the majority don't, because they're really stripping away their best ideas by hedging in things that will actually underperform when those best ideas are going to perform. And they're not really making a good idea great. They're making a great idea an okay one. And we want to make trades that are, relatively good, that people may be getting into at the wrong time and the wrong price. We want to make them extraordinary trades by getting in at the right time and the right price with the right mindset. So don't listen to the funds that talk about risk-adjusted returns or talk about risk and all that kind of stuff. I would focus on emotional adjusted returns or comfort adjusted returns. If you're going to get the same return in 2 different things, even though the 2 things may have the same volatility, one could actually create more discomfort as a trader because there's no transparency. But one thing, like with my members, is they have all the transparency because they know exactly what what we're looking at before it happens and what the range of human emotion is likely to be before it shows up in price. And the last thing I want to mention on the show, and it kind of goes back to what I talked about in the beginning when you asked me about silver, is that there was a big event that happened today, just monstrous. I mean, I just have to mention it because it's probably going to be in every book in history. And it didn't trick my trading. My trading strategy actually saw this thing. I didn't know exactly that it was going to happen that day. There's no way of knowing when an individual actor or a set of actors is definitely going to pull the trigger on a given day. But I knew that the underlyings were and factors were in play to allow for something like that. And what I'm talking about is this GameStop, the company. The symbol is G, I believe it's GME, but you could look it up, but it's GameStop. And what happened was there was a spectacular movement in the past few days from like the $20, $30 area to $500 plus within literally hours. And then they shut it down. They did, and what happened was that, and I don't blame the people for making this happen. Whether they were aware it was definitely going to be that extreme. What happened is the people on Robin and a lot of these smaller investors that felt that they were being mistreated by the large investment firms over the past decades because they had access to more opportunities and certain strategies were not democratized to the masses. They tried using and tried exploiting the ability for crowds to get together on social media, whether it's on Reddit, whether it's on Twitter or Facebook. But I believe in this case, it's usually for stocks. It's a popular site when it comes to that, Reddit. And people banded together, and a lot of the people that are newbies to trading and this new generation, they tend to use platforms like Robinhood where the fees are non-existent and for transactions, and basically they get access to a lot of opportunities that weren't available in the past. And because the small trader is so small compared to the big guys often short stocks and they make a lot of money off it, and sometimes they hurt the small guy doing it because the small guy is trying to invest in something and the big guy is just slamming it down, and he has so much money he could drive the other guy out of existence and then use the other person's emotional failures to acquire the stock at a lower price and totally take advantage of the small guy. So these Robinhood traders, and I don't want to say these Robinhood traders because I don't want to create a problem for Robinhood. I think Robinhood is a tremendous company and what they've done to democratize access to traders. And this is not Robinhood's, really, it's not Robinhood's fault. I think it's just where we are in history right now, given all the things that transpired over the past couple decades between small traders and big ones. And what happened is they all got together and said, hey, we may all have a small amount of money, but what if, just like the big funds that pool money together, rather than actually pool it together, because that would be illegal without actually having a fund, what if we just communicate as kind of like a tribe on Reddit or whatever platform? And they may have been able to pull this off for longer had they been on maybe a decentralized platform built on the Ethereum in a way where it wasn't on Reddit, because Reddit's centralized and they could just cut you off, just like the same way Twitter and Facebook could cut you off if you say something that they don't like. So, so basically, what happened is that they got together and they all communicated. They say, hey, there's this big short position. So they tried to look at all the companies in the market that had extraordinary short positions. And I'm not just talking about like typical short positions where maybe 3% of a stock is shorted, means that somebody's selling something they don't own. And what happens when you do that is that if you don't own it, when it comes time to cover the position, you actually have to buy the stock back from someone and then get rid of it. And sometimes when you buy it back, it causes the stock to go up. So, okay, that's why it's called short. It's because you don't have it. You're selling something you don't own. And the thing is, normally only maybe 3%, 7% of a company, that would be pretty good. That, like they, if Wall Street attacked a stock, that would be a good position. And then if good news came into the stock, they would have to cover their positions and then there'd be a huge spike. But in these specific instances that these Robinhood traders were after, or these bandit traders, it doesn't have to be Robinhood, but small traders, basically, they basically identified a stock that had almost 100% short position, which means there'd be no way to cover the position unless you were able to entice a long-term trader that wants to hold the stock for 10 or 20 years to actually, because people that hold the stock for 10 or 20 years usually demand a several 100% return, just based on, that kind of viewpoint. So the stock ended up doubling and then because in order to find a buyer, in order to sell it to somebody that would buy, to do that, they would actually have to drive the stock up so much to entice the covering of that position. And that's how the stock went to the stratosphere. And then when they saw that it worked with GameStop, they tried applying it to other stocks. And right now, there is a massive short position. It was more massive before, but there's definitely a short position in the silver market. So all I'm saying is that even without the short position, some people only try to invest in stocks with shorts because they tend to go up faster. But I'm looking at real themes that have to do with fundamentals and real reasons of why something would go up, and also perception biases that that's very, very technical. But because these people are not leaving anytime soon, like they could only stop them for a few stocks, but they'll be on to the next one. And I think possibly the next group of stocks these small groups of traders are going to try to attack are going to be silver companies, which is going to cause them to go up tremendously because there's so many short positions in there. Now, while the short positions are not 100% short the stocks, it's still significant short positions that could allow for a much more exaggerated move to the upside. So we have a perfect storm for short sellers to lose their money if they plan on shorting silver or silver equities, especially the ones I'm looking at, because they look like they have the best ability not only to outperform the S&P 500, because I looked at the ratio chart of silver to the S&P 500, silver equities like Hecla to the S&P 500, and especially others that are in my members list, they are going to explode relative to the S&P 500, regardless of if the S&P 500 goes up or down. Now, they're going to do it in waves this year, so times where they could go against, but immediately the question you asked me is there anything imminent? And I'm saying yes, early February, but you got to get in before then because trends start early, and especially if these shorts start covering, and I think they may have started today. So I would be looking at putting your strategies up, buying some, and then acquiring more on any kind of pullbacks, especially as you move into the middle of the month, and then let it ride, and then use those profits to buy more opportunities in other areas as the year unfolds.
All right, awesome, Efrem. So I'm going to focus on HL as the symbol and PSLV. You mentioned those, and I have to say I love listening to you. I'm a geek at heart, but for me, it makes sense to invest in the $379 subscription so I can be a member and get the prediction window or opportunity from you live. And so, everyone that's watching, you're going to spend money on consumables and depreciables. It's not going to earn you any money. So I would highly suggest considering to become a member. And we're not here to sell anything. The Hardcore Hustle is a platform to serve a vast number of people, offering incredible information on business, biceps, and spirituality. We have an incredible guest today. He was on the show 5 months ago. We're going to bring him back in a few weeks again, Efrem Hoffman. But like I said, you can check out his resume, as I mentioned in the beginning of the show. Truly highly intelligent individual, one of my favorite people. And he's my right-hand man when it comes to investing. And he's super humble, as you can tell, and can go on and explains things thoroughly and backs them up. He's even a scientific genius, in my humble opinion. So yeah, if you want to invest $379 a month, it's a good idea. Send me an email, Felicia@FeliciaPizzonia.com. I want to thank everyone for joining. We did go a little bit extra. I really want to thank my AV guy. He's actually in Brazil, Matt. Thank you so much, Mateo, for being, such an amazing audiovisual guy. He's the guy that, throws on the Ultimate Publishing House and posts our name at the bottom of the screen. And Efrem, I want to thank you from the bottom of my heart for joining us on the Hardcore Hustle, and we'll have you again very soon.
Well, thank you so much, Felicia, and I really enjoyed being on the show, and it was a great experience. And I hope investors, will save a bit of money and have a little bit more sleep after being aware of what's to come. So
definitely. Well, I'm going to dream of the capital gains and all the beautiful things that you spoke about and all the symbols that you shared. So again, Efrem Hoffman, check him out. Send me an email and definitely become a member. It'll be the best investment of this year that you'll do for yourself. Thank you again, Efrem. Thank you, everyone. And this is a sign off from Felicia Pizzonia. Thank you for joining the Hardcore Hustle. If you haven't subscribed, be sure to do so on YouTube. And thank you again for your time. And I hope you found this information valuable. All the best and success in all aspects of life.